Hello, and welcome to Pro Trader Strategies Market Commentary for Wednesday, September the 27th. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. And please remember that past performance of any trading system or methodology is not necessarily indicative of future results. All right, having all that out of the way, let's get it on. Not a whole lot of economic data across the pond, but here in the United States, we got core durable goods orders came in line with expectations at 0.2%, and then durable goods orders actually increased decently to 1.7%, expected to be 1%. Now, keep in mind that durable goods adds in some of the more volatile aspects of the number, and that includes like airplanes and autos. And I've got a little story to talk about the airplanes here in a little bit, but let's move on with that. And then we have pending home sales came in at negative 2.6%, expected to be a 0.5% or negative 0.5%, so quite a bit lower there on the pending home sales. Then we have crude oil inventories coming in at a drawdown of 1.8 million barrels versus the expected build of 2.9 million barrels. Now, having all that that information came out of the EIA, which is the Environmental Information Administration. It's not as robust as the DOE, which is the Department of Energy. EIA basically is a volunteer information, whereas the DOE, they have to release the exact information. So just keep that in mind. But one thing we did notice with that drawdown, which is why crude oil isn't really starting to rally a whole lot, I believe. For one, it could be technical as well. But two, the other side of the coin is that we saw on the distillates, actually, when they take the crude oil and convert it into, say, gasoline, those actually started to rise. So they're taking inventory and they're converting it, but those inventories of the converted output are starting to rise. So now, is it that disruption that I talked about from the hurricanes? Maybe that's starting to show up now, and I was a little bit early, but what we're seeing is the refined products are actually starting to rise on inventories. So that could be causing crude oil a little bit of a stall to the upside, aside from the fact that I think there's some technical factors in there as well. All right, on to the other markets. We've got gold futures coming off and back below that 1,300 psychological level. Yesterday we sold off and basically did an engulfing pattern over the previous day, which is a pretty bearish candle, and it's settled below that 1,300 area as well as the value area high. So now the market is going to want to migrate down and at least test the 61 fib level, and then on to the point of control, which is lining up with the 50 fib level. Then bonds coming off quite a bit, down 1.5 points now. I talked about it wanting to go to the value area, despite the fact that yesterday that Yellen was speaking a little bit hawkish in a sense. Then she turns around and starts talking a little bit dovish. I don't know if she really knows what's going on, because I talked about this before, that there really isn't inflation. We aren't even quite at even 2%. So that would, be a situation when we get above 2%, that would be something that may be coming to their minds. But at the end of the day, we aren't even there yet. So I think that was a little bit overstated. She was talking that they might want to be a little bit more aggressive with inflation and the overall economy, but at the end of the day, we're not really seeing a really robust economy, and we're not seeing that inflation. So to increase interest rates at this time, it would be not a good idea as far as I'm concerned. So today we're starting to see this come off. Also later on today, I do believe we have another Fed governor speaking as well, and I can't remember who it was offhand. Let me just check it out and see if I can figure that out real quick. It is Bernard speaking later today. And we also get Trump speaking as well. Then let's move on to the VIX. The VIX is coming up a little bit. It's, for the most part, it's not really moving anywhere. It's up 10 to 1022, up just a couple of pennies. Then on to the Dow Jones Industrial Average, off 4 points, but Dow Jones Industrial Average, we could call that unchanged for all intents and purposes. We do have the NASDAQ moving higher by 22 points, almost 22 now, but it is right there at the value area where the most time and volume, or where the most volume, I should say, the time is down here, but where the most volume has taken place, where people are putting their money where their mouth is. I actually have a tendency to migrate towards the volume node as being more important than the actual time nodes. Anyway, on to the E-mini S&Ps. It's up slightly, but unchanged for all intents and purposes. Up 1.5 points is pretty much unchanged. So pretty quiet markets today across the board. And if we look at the E-mini S&Ps here, it has had some major fluctuation, if you will, but for the most part, off the economic data, we started seeing a real pullback on that. The crude oil inventories and things of that nature crude oil actually gave it a little bit of a boost, but then people started seeing these distillate numbers and kind of got a little weary of that number. So market has come back off a bit. All right, on to a couple of things that I was wanting to talk about. Boeing, you guys know I have on this strangle that I've been kind of defending, okay? I basically had on the 255, 215 strangle, rolled those 215 puts up to the 245 puts to create a bit of tighter strangle on there, collect a little bit more credit, stay mechanical with this trade. I almost pulled the ripcord on this thing today when we started rallying, but then I saw this data point out of Reuters, and basically it was Great Britain told the U.S. plane maker Boeing that they were very happy with the fact that there was a 220% duty on Bombardier's C-Series jets. So the wings are made in Belfast, and Britain is really reliant on Ireland for getting out of Brexit. So there's a lot of things going on there. They're really tight, and that, because those wings are made in Belfast, and that tariff is going to hurt already a weak economy in Ireland. Basically, Boeing said it was going to jeopardize their relationship for creating the aircrafts used for the Britain's army, or armed services anyway. So that caused the overall market to come back down, basically inside of my wings. So I'm kind of holding tight right here. I'm kind of hoping that this creates a little bit more of a stir for the next few days. I can get some theta decay and things of that nature, and volatility to come back out of there. But we'll have to see. That could actually increase volatility with this type of information coming out. But I do think it is more bearish to Boeing in that regard. So I'm sticking with it for right now, but I am close to the ripcord on this because it's kind of testing my high a few too many times for my comfort. Usually I don't mind if it goes up there, test it, and comes back down. Those are the probabilities I know I'm dealing with. But when it starts banging up against it several times, it seems like that directionality might be a little bit too ahead of itself. So having said that, sticking with it for right now, but it is on a very short leash with me right now. All right, something I've added, and I added this to my trading account, my margin account, and it's Activision, so which is ticker symbol ATVI, and I went in there and sold the October 58.5 puts for 33 cents in there. So as you can see, I kind of got a nice little bounce off of where this volume node is. We're starting to see a little bit of rebound. We had high implied volatility. It looks like it's starting to come out, and my 58.5 puts are well below this volume node. So I'm way down here. So I believe I'm okay with that, especially now that we're starting to see a rebound up and away from that. Now price has been accepted in a sense because we have the high volume note here, but there's not a lot of money being exchanged hands here. So I think that this has a little bit more room to bounce around before we start seeing. And I think that we could even see a newer high with this because, you know, the overall area is doing very well. So I think we could see that move a little bit higher. We're seeing EA Sports move higher as well. All right, and then on to my, I think that might be it for my, Kroger. That's right. Or sorry, Kellogg. Kellogg, I pulled the ripcord on this out of my IRA. I've tried to stay with it. You know, there was a double bottom here. I thought it would stay up there. We got this engulfing candle. I was like, I'm going to hold on to it one more day. With that, after that double bottom, we've got the engulfing candle to the upside yesterday. It did not look too good. I was hoping maybe it was just a little bit of consolidation, going to get a bounce, but then today market fell out again. I just decided I'm not going to stick around with this any longer and pulled out of it. You know, for some reason these consumer staples and especially the breakfast cereal group is not doing very well. I don't know, maybe the millennials don't like eating cereal or something, but at the end of the day, I decided to pull the ripcord on this. And if you remember, I had on a long call spread in there, and I did it in the November, bought the 60 calls, sold the 70 calls, and I paid $4.53. So that was in line with my rules, less than 50%. The width of those strikes, that was good. I didn't get the directionality, and I'm not going to stick with it because it has not seemed to have found a bottom. So out of that, collected $3.40 to get out of that. So a bit of a loser there, but moving on with my life and forgetting about Kellogg in the meantime. Kroger's not doing too well either right now. But anyways, I haven't added any Kroger or anything like that. So that's what I've done today. Friday's webinar is going to be basically based on hopefully this Boeing trade, where I can talk about how the market has come back off and staying mechanical works out, but we'll have to see. So check it out on Friday, and you can see my case study on the strangle and how to be mechanical when it goes against you. All right. So if you can't take that, take it easy.